I wanted to describe one of the methods of estimating bad debt expense. This is the analysis of receivables method. Sometimes it's called the analysis method or percent of receivables method. Two or three ways to call it. The problem gave us this little picture, which I've transferred over here and turned it into an actual Excel spreadsheet. So I'm going to get rid of this picture. And this shows a company with 4 customers listed, plus all the bunch of the other customers summarized. The customer called Alma has $30,000 that they owe us, 13,500. Oops. Is 1 to 30 days past due. 16,500 is 31 to 60 days past due. The total is $30,000. And that goes on down for each of these customers. This is the total of all these figures, and that's called footing when you add up a column. I've cross-footed, which is adding up a row. So I've cross-footed all these to make sure that both balances work out. I've got my math pretty well right there. And what we've done, or what the company has done, is they've estimated that of the current receivables, they will not collect 2% of the current receivables. Of the receivables that are 1 to 30 days past due, 6% of those will probably not be collected. And then 10% for up to 60 days past due, 25% of receivables 61 to 90 days past due, and then past 90, 40% of those are not collectible. Simply multiply the total of the column, 205,500 current, not yet due, times 2% gives you $4,110. In the next column, 43,500 times 6% gives you an estimated amount not collectible of 2610. All the way down to these guys, where we expect to lose 40% of these after 90 days, and that is 26,400. The total is $47,970, and we have a allowance for doubtful accounts balance, credit balance of $16,000, and we're supposed to journalize and post the entry. So to journalize it, let's look at the post, what the T account looks like. The unadjusted balance is $16,000 credit balance. The adjusted balance is going to be our estimate of uncollectible accounts, $47,970. So we need to make an adjustment that will add to this credit balance to equal that credit balance. That's a subtraction problem. 31,970 is the number. You can just do that on your calculator to make sure I subtracted the unadjusted balance from the adjusted balance. The difference is the entry. And you can just double check by adding 16,000 and 31,970 to get this ending balance. Now you notice here, this is the adjustment, debit to bad debt expense, credit to allowance for doubtful accounts for the amount of the adjusting entry that we came up with. Now remember, we never touch the bad debt expense account except when we're making our adjusting entries. Under the allowance method, which is according to GAAP, you only use bad debt expense when you make your adjusting entry. All the other work is done through the allowance for doubtful accounts account. Okay. Journalize and post to the allowance account the following events. March 1st, a $1,900 customer balance is judged uncollectible. So we're going to debit allowance for doubtful accounts and credit accounts receivable for that. And that would look something like this. I'm trying to find a place where we can make them. This is a debit to allowance for doubtful accounts and a credit to accounts receivable for $1,900. That's simple. That's just writing off the account. The next one is not too hard, not hard either, really. It says a check for $1,900 was received from that customer, and we're going to record that collection of that, what we thought was an uncollectible account. You do that in 2 steps. The first step is to reinstate the account in accounts receivable. Basically, if you look, this entry is just the reverse of that entry. So the entry, the posting, would look like this. A debit to accounts receivable and a credit to the allowance for doubtful accounts, putting this account back into our accounts receivable. And then finally just recording the receipt of cash and taking it out one more time out of accounts receivable. Just going to draw a couple of arrows for us. This entry, these 2 postings come from the same entry. These 2 postings come from the same entry. Basically just reversing their former one, and then this entry. This posting comes from one entry. So that's how we record the bad debt expense, and then how we also record an uncollectible account, and then the reinstatement and collection of a formerly uncollectible account. The next part of the question asks us to journalize the adjusting entry, which was this entry up here. Journalize the adjusting entry for bad debt expense, assuming that the unadjusted balance in the allowance for doubtful accounts account is $2,000. There's my debit balance. And that the aging schedule estimates that total bad debts will be $38,300. Scrolling up, that would mean that this number here would turn out to be $38,300 in the aging schedule. So let's just plug that in. Now, if I have a debit balance and I'm unadjusted and I need to adjust it down to get to a credit balance, then I need to add those 2 numbers together. So my adjusting entry should be a credit entry of $40,300, debit balance of $2,000. A credit entry of $40,300 gives me a credit balance of $38,300, which is exactly what they asked us, what they estimated their bad debts to be. So this is the analysis method, the analysis of receivables or aging of receivables, called all those things. We'll have another little video on the percent of sales method.